Hey guys, welcome to Chapter 4. Chapter 4 is made up of 4 different lessons, all dealing with analyzing the procedures for posting from a journal, which you did in Chapter 3, to something called a general ledger, which is important because so far you guys have learned how to record transactions in a journal, and we've done so in a chronological order. And that shows us some things, but it doesn't show us really the individual account balances. So at the end of Chapter 3, you guys totaled account numbers and you proved the journal to figure out how much in each basic account you kind of had. And you could see clear numbers in the cash and sales account, which had its own special account columns. But in the general account column, that was made up of a whole bunch of different types of accounts, right? Supplies, prepaid insurance, the owner's equity accounts, and stuff. And so, one really important part of maintaining a business is looking at individual account balances to be able to check and see how much you're spending on things if it's an expense account, or how much of something that you have been buying, like how much you've been spending on supplies, like how much, what is your supplies balance, what is, other asset account balances. So you might want to look beyond just cash and sales and look at some totals. And so that's what maintaining a general ledger account is. And so in lesson 4.1 just talks about some general stuff and some vocabulary. And then lessons 4.2 and 4.3 are the nuts and bolts of actually putting stuff together. And then 4.4 is looking at what to do if you make an error. So just going through 4.1 pretty quick, and then I will go through the MindTap assignment as well. You're going to be using something called an account form in this chapter, and it looks similar to a journal, but it is a little bit different. And so each account, cash, supplies, prepaid insurance, any accounts receivable, any accounts payable, whatever, they're all going to have their own individual account form. So you're going to have a separate form basically for each account. Looking back all the way to chapter 2, it's really similar here. It has like its own T account, kind of the debits and the credits. And so the account up here, you're going to end up putting the account title up here, right? Supplies, cash, prepaid insurance, accounts receivable, something like that. The date, the item we're going to leave blank for right now. We'll get to that later or in other chapters. Post reference is something that showed up on the journal as well, but we didn't do anything with it in chapter 3. We're going to be using that now. And then the T accounts that should be familiar. And then it extends a little bit to have the actual balances here. Because like we said, you want a way to be able to track and see at a quick glance an individual account balance. So if you perform a bunch of services for a client and you have a very large accounts payable account for one of your clients who hasn't paid you for a long time and they want to settle up their bill from multiple different services, you want to be able to go back in and not have to flip through pages and pages of journal entries and then individually calculate these things. So you kind of do this along the way to maintain an individual balance. So if at one point in time, if that client comes and says, hey, I'd like to pay all of my invoices, you should be able to kind of look at this account form that you've maintained for that accounts payable account and list all of the different things that you've kind of done to be able to refer back to the journal for it and get a quick balance of that account there. So that's the purpose sort of this. And it does go back to our chart of accounts. And so in the MindTap assignment, you'll see you're going to dig into a little bit more of it on the chart of accounts. So this is the chart of accounts for Delgado Web Services, that business that we've been working with. And so a lot of this should seem really familiar, but now today we're going to look into more specifically these account numbers and why these things are classified the way that they are. One big thing to notice in the chart of accounts that we've talked about before is that there's kind of 2 different columns here, right? There's a balance sheet accounts, which lists assets, liabilities, and owner's equity. That is our accounting equation, basically. And the balance sheet is a very, very common report that a business owner would look at basically, every month, every quarter, and definitely at year end. It's something that goes along when you're analyzing annual reports and figuring out, what you're spending money on, how much money, you owe in terms of liabilities, how much money is owed you, or how many things do you have? What are the things that you own? And what is that equity in there? Which, remember, do include some of this other stuff like revenue and expenses, but this, the revenue and expenses are reported in a different section because that's how you figure out your profit for the year. Revenue, how much money you make, minus the expenses, how much money you spend to operate your business, equals your net profit. And so there's reasons why these things are separated out the way that they are. And it goes down to reporting and being able to look at the health of a business over time. So we're going to look at why these account numbers are assigned. And as you'll see here, account numbers for Delgado Web Services all have 3 digits: 110, 510, 550, 310, whatever. All of the asset accounts are listed in accounts with a 100. They start with a 1, so you can block off the 10, 20, 30. Any asset, so basically any account starting with a 1 is an asset account. Any account starting with a 2 is going to be a liability. 3 is owner's equity, 4 revenue, 5 expenses, and then these are further broken down into tens. So 110, so 10 is cash of the asset accounts, 20 is petty cash, 30 is one account's receivable, 40 is another account's receivable, and so forth. And again, there is a specific reason why that is done, and we'll get to that in just a second. So some other vocab for this chapter. Dealing with this chart of accounts. So a group of accounts is called a ledger that contains all accounts needed to prepare financial statements. Those balance sheets and those income statements are financial statements. All of those accounts together called general ledger. The name given to an account is known as an account title that you should be familiar with. We've worked with that when we were doing our journal entries. And then the number assigned to the account is called the account number, what I was just talking about with the 100 and 200s and 300s and so forth. So this is just going to kind of summarize a little bit what we were just saying. So anything starting with a 1, again, is an asset. And then it's further broken down into a 10, with 50 being supplies. 150 means it's an asset account. 50 is just the number that was given to any supply account. And so it comes down to a little bit of planning. And so you're going to arrange your accounts in a specific way. And the reason why you do things in increments of tens is because you're leaving room to create new accounts. And you do this regularly, called file maintenance, by looking at the different accounts, because sometimes, again, you might not be using a different account, but businesses always like to compare past performance. And so businesses never really delete accounts. Like an example given in the book is rental expense is a type of account. Well, so say Delgado Web Services gets big enough, and then Michael Delgado buys some equipment and he no longer has to rent it. Well, you would still keep rental expense as an account, even though you're not going to use it anymore because you bought the equipment, just so you can compare past numbers from year to year. So this is just an example. It's a closer look at the chart of accounts. Under the expense category, which are the 500s, Delgado Web Services has something called miscellaneous expense and then supplies expense. Miscellaneous expense is account number 560 and 570 for supplies expense. So now say that underneath miscellaneous expense, Michael Delgado had been charging postage, or things that he sends out in the mail, like invoices or whatever, charging postage underneath the miscellaneous expense. Now say that postage expense gets to be big enough where he just wants to have it as its own account, not to fall underneath miscellaneous expense, but to be its own account. So he will create a new account and call it 565. So again, starting with a 5, it's still an expense, but it's now going to be its own account with its own number. And the reason you choose 565 is, again, you want to leave numbers on either side. So now we still have 561, 62, 63, and 64, and the other numbers up to 570, to be able to create new accounts in the future, just to leave room for your business to kind of grow. If you just want to add on an entirely new expense that previously hadn't fallen under any other type of expense, so postage fell under miscellaneous previously, then he decided to make its own account. So just to make things easy, you keep it near the original expense account. But water expense, if it's previously maybe he was renting an office space and the water expense was included in on that rental expense, and then he moves to a different space and now water has to be its own separate bill that he's going to end up paying every single month. So he wants to create an account like that. He might just tack on a whole new account. So 570 was the last number in that account previously. Now we're at 580. It's just a way to leave space in between things to leave room for growth later. So opening an account in a general ledger is just one way. It's basically kind of like starting a new account form for that. Um, Again, this is kind of an example of an account form for our account cash. You label it with cash up there, and then we write the account number 110, which comes from our chart of accounts up there. And then now you've pretty much opened an account in a general ledger to be able to report totals that you'll see how to do in 4.2 and 4.3. So in the MindTap, this is going to be a part of what you're going to do is just these two steps, writing the account title up there next to account, and then the account number next to account number that matches your chart of accounts. And that is it.